Hi, Warriors. How's everyone doing today? How's that ceasefire holding up? Did we obliterate the Iranian nuclear program? Different reports. I don't know if they would use obliterate. How you doing, Mike? Blake? One thing we want to do for sure is not let our counts get obliterated, right? So one mistake business, don't make it. Use stops. Hi, Steve, James, Kman. How are you, AJ, Ryan, Kurt, Ingmar? I'm fine. Okay, let's go to work. Okay. So let's start off with Ryan here. So, something Blake and I talked about yesterday during FACE is that we could, we never got up to 1650 here, right? And then also here, we had a confirmed high here. All right. So to me, this may have just been a stop hunt. I mean, if you had your stop over, what was it, 31, you're out. If you put it one tick above it, don't do that. And give yourself like, 0.5%, 1% above swing highs so this doesn't happen to you. Or it will over and over and over again. Everyone with me on that? Don't put you think you're limiting your risk. What you're doing is limiting your opportunity by doing that. So I want to start off with Ryan. So Ryan, now that we took care of some perhaps unfinished business up here, and we're trading below it. 1550 could come into play again. What do you think, my trading warrior brother Ryan Littlestone?
Good morning, sir. Yeah, it's caught me that we haven't managed to push on through those highs.
Yeah,
It had no reason not to push on after everything that went on. Get back on the train and keep going. So it is a bit of a caution needed at this point. But the dips so far aren't coming back too far. We're
right.
still hovering about that 116. So you've got some of those there around the 80 level. So sort of 115, 70, 80. If we're back below there, then you're probably going to get your 50s and maybe even more. But
Yeah,
if we dip to 115, 70, 80, hold that, it
and then
keeps
go. Yeah,
yeah, it could go. But we might. I still haven't got confirmation. I need to try and get it. Potential barrier action every 50 pips from 116.50 all the way to 120. We probably had that from 115 all the way to up to 120. So that needs to be a consideration as well. So if you suddenly see the price, 116.50, it holds, 117, it holds, then breaks 117.50, it holds, that sort
yeah.
of thing. That will be an indication that there's barriers in play.
Okay. So I thought this might be, drive two up here. This was drive one, and this is drive two.
Yeah.
For those that use this, at times on your three, you could end up with a fractal. So, sometimes these peaks are not only labeled as a one or a two or a three, but within those labelings can be a fractal three, a smaller time frame three, which so far this looks like two. Doesn't have to happen, but I consider this, on most time frames, that push to new highs did not confirm, right? So it could be an important divergence here. Any news that could shake the dollar? Also, the dollar looked like we should have made new lows yesterday, putting in a higher low. Most people think they had new lows in the bag after this. And, I'm long, and I thought, that's possible. They could still take this down. But I think the pain trade would be the dollar bears taking heat, then they think they have a resumption of the trend, and then they get squeezed one more time
Yeah.
back over 98, and maybe this time even over 99 to take it up here. So I still think that the market setup, although I have stops in under 97, is set up. The pain trade is a rally,
Yeah.
and it will be for a while. So,
I said it yesterday, you know, when we had the rally and all the risk off stuff, I said you need to watch for it to continue. And if it doesn't continue, it can only go the other way. And the opposite was yesterday. We had the reversal. Can it continue? Can it get down to those lows that you had
yeah.
sort of 12th, 16th of June? And we got close, but no cigar. And then you see a bit of reversal. You know, I tried exactly the same thing in dollar yen yesterday. I bought 145.
Yeah.
I had stops at 144.70. They got knocked out yesterday. And when it was traded 144.50s, I thought that, well, that stop was pretty good. Now we're
Yeah. Yeah.
reversed back up again. So, you know,
Yeah.
I got the direction right, just the, you know, the entry, whatever, wrong. But, you know, that's like you say, that's trading. That's why you need your stops in, and you try and build yourself a bit of room. And sometimes it works and sometimes it doesn't. You know,
Okay. So, say you were long, you got long, and the market's doing here, market's here. What would you do with it now? If you were long, say you bought it at 44.70 and you're still long, what would you do with the N here?
oh, I'd be cutting slices off all the way up and making
Okay.
sure my stop is being pulled up behind it. I
Okay.
wouldn't be shorting it here. I think 146. You know, that's potentially where the next band is. But you know, if you go just to the 18th, 19th,
Yeah.
we had a high in there before we got the big spike up. So there's merit to at least take profit against that level in case it holds again. You know, it could set up a Blake will be looking for a bit of a head and shoulders type thing going on there.
Did you say Blake would be looking for that?
Yeah, maybe. you like head and shoulders because you spoke about the dollar CAD this morning, exactly what I was talking about in the flow show, but not in head and shoulders terms.
Oh yeah, you know, but I wanted to jump in here talking more about the yen, just because last night I mean I popped in Asia, you know, just kind of just seeing what's going on, and there were some pretty hawkish comments from one of the BOJ governors. I forget what his name is.
Tamura.
Tamura, that's it. And so when I got up this morning and I saw the dollar yen up 100 pips from where it was at last night, I was surprised. I didn't think Europe would come in and just start selling yen. Was there any reason why? Do you know?
I don't actually.
How about the possibility that it's 2 days of testimony from Powell, right? He's going to be
Yeah,
back
yeah,
today.
yeah. This will
Yeah,
be
back
day
today.
2 of the Humphrey Hawkins. Yeah.
So I know he sounded, fairly firm about, we're in no hurry. There's no emergency. That's what he said. Everything's strong. If inflation behaves, we'll take it down. He didn't
Yeah,
talk about employment. Said the economy's strong. So the market faded him. But you know what? Maybe rates, just like rates went up when he eased about 3 months ago, if people are thinking he's behind the curve, and I'm hearing a lot of it, like from Danielle and, a lot of people, he's behind the curve. The president thinks he's late.
yeah.
That actually yields could fall because the Fed's too tight and they think he's behind the curve and the economy's going to weaken. Could that be a possibility?
He's scared. He is listening to his comments yesterday. The main take I got from it, he is scared of being caught in with his pants down again over inflation. Okay, if
Yeah,
inflation doesn't go up in the latter part of this year, then he'll bring rates down, and he'll go, yeah, well, we waited, and now we can bring rates down. That's if the economy isn't crapping out in the meantime. But
yeah,
if he's caution is right, and we're going to see an inflation jump into
yeah,
the end of the year because of all this tariff stuff, then he's done his job and he hasn't been caught with his pants down like he did when inflation shot to 10%.
yeah.
Um, and
Good point.
that's the game that's the only game he's playing at the moment.
Yeah,
Because
yeah,
again, further down the line, I've said it since the rates went up. They do not want rates above or at 4% for any
okay.
period of time. but he's keeping them there because he doesn't want to get caught with his pants down again.
So he has PTSD from
Yeah.
that,
Good
it's
description. Yeah.
from saying the word transitory.
From 2 years ago. Yeah. PTSD.
Yeah, I don't think he'll use that word again, transitory. Anyway, so yeah, that's a possibility. Maybe sounds like a hawk, and even more of a hawk today, and that's what fuels the dollar. What's the news today we have to pay attention to?
Nothing. There's not much data out.
Okay, so it's all him.
Yeah,
It's all,
but going back
him.
to what Blake was saying about Tamura, he's probably the most hawkish on the board, and he was like, "Yeah, we could hike, or inflation could get to target sooner," and talking all hawkishly. And then right at the very end, he said, "Yeah, but we're unlikely to hike while the trade deal's being sorted out and all that uncertainty." So hawkish on one hand and pull the rug on the other. So that's probably another reason why the yen's weakened as much as it has.
Okay, so I see there's been a little shift in euro from Grega, but he still has it, moving up to these levels up here. So he's still constructive. Um, I just want you guys to see what a great platform we have here. So, you have your news flow here. Traffic lights, I think, was really a cool idea. If you're bullish and you see a red, take a look at the charts, and if you're bearish and you see greens, take a look at the counter argument. It's always important to look at both cases in the market, because you may have missed something. And, once we're in a trade, we're less objective and we're more attached and subjective. So the best way to cure that is to look at the work of other people you respect and see what they're seeing. And perhaps that might change your mind. So, I believe, always have, in intelligence gathering, and you gather intelligence from intelligent people, traders. So this is important that you have sounding boards to compare what you're seeing compared to the guys that, have been in the business maybe 20 years longer than you. So that's something to consider, and you may as well act on it, because these markets aren't going to get easier. I want to bring in Kay, and Kay, you doing anything in the good morning to you, and you doing anything in the crosses and the end crosses?
Morning, Dale. Morning, everybody.
Hey, buddy.
I missed it yesterday. I was looking when dollar yen came down. I was hoping that when it took the yen process a bit lower, and they still to go much lower than what we got during your morning. So no, I'm kind of missed them, but they still look very constructive. If you look at most of them, I would look especially at two of them, which are the euro and the sterling yen. Those two, they still look pretty good. I'm not sure about the commodity currencies. They will all go together, right? I mean, it's a bit of a yen thing, but I'd say euro and sterling, the major ones, look still constructive, and but no, I missed to enter. I've actually not done much, Dale, since we spoke yesterday. I scaled back a little more on my add-ons that I had in Eurodollar and cable, and then for the rest I left most of it alone. The only thing I did was, but it's a shy trade, getting back into a bit short dollar mix. The one that is, I won't say like for an immediate trade on my radar now, maybe silver again. I would really like them to take it down to low 35s to start to add again. But for the time being, it's the metals are stabilizing. So I'm not sure if today we are going to get much, to be honest.
Yeah, definitely. Gold silver ratio. We had I wasn't here, but we had Zach Manis on, and he commented on the gold silver ratio.
Mm.
And I watched that interview, which Blake did a great job, and so did Zach. He's looking for one more shot up in the
Yeah.
gold silver ratio, which would,
Mm.
favor gold on the long side over silver if
Mm.
that's the case. Um, but,
Yeah. Mhm.
I know that this, I started showing this last week. We could have a 2 week reversal here in the
Yeah,
silver. If
yeah, I'm not in a hurry. I'm really not in a hurry. I actually would like them to well, I'm
take
going
it
to
down to
shyly,
take it down to about 4.5, based
yeah,
upon this formation here, kind of
mm,
looks like, well,
yeah,
false breakdown, but
yeah,
5.5, 7.5, gives you
three
three
and a
and a
half,
half. Yeah,
three
yeah.
and a half. Yeah, why not? I
That's
mean,
back to the breakout.
if you, yeah, if you're able to add like little slices to existing, I've been long for ages on that one, but just yeah, trading slices around and then get back in when it drops back. I still think we're going to perhaps this year. I know still and I agree with them. Still and Steve think we're going much higher, but I one step at a time is always the way I'm looking at things. And I guess for this year we may end up closer to 40 than 30, and maybe even above. But it's all going to perhaps take a bit of time because now we are going into waiting for what's going to happen on the tariffs, maybe beginning of July. I'm not sure that the players really want to get involved too big. But then I guess second half of the year we will know exactly what's going on there. Yeah, for the rest, I say, I mean, we are also and just we need to remind people about that and remind ourselves maybe about that because yesterday we had a pretty steep move in the Swiss franc. I think we are entering the influence field of month, quarter, and half year end. And I'm yesterday afternoon, all of a sudden, out of the blue, the Swiss franc started to strengthen, and we will have to start looking at what's going to happen on those London fixings. Tomorrow we trade value data end of month, and yeah, from now on, I think pay just watch what's happening and keep the clock in mind when you're trading and when you see a move which is perhaps not warranted at the time that it really happens, like it happened yesterday with the Swissy.
Hey,
Yeah.
Kate, can I jump in here and just ask for like value date or corporate month
Yeah.
end, would we be looking for dollar strength tomorrow?
Uh, well, It's
Since,
the monthly seems to be looking for a bit of dollar weakness, but we know what happens on the value data with the U.S. corporates. But they can be counter trend when they go shopping for dollars. But the problem is that I have at least for month end and for quarter and half year end is that we have a lot of divergence between the European, especially equities, and the rest of the world because European equities have outperformed the rest. If you look at DAX, for instance, is up what 17% year to date, and the S&P is
yeah.
only up 2%. And I'm not even sure that we are going to see euro dollar buying, and that's also one of the reasons why I'm a bit cautious right now. My overall bias hasn't changed, but I'm putting it in the fridge for a while until the month is over.
All right. Dale, do you
Uh,
mind if I grab the charts, buddy?
just one last point. Look at the relative strength in Canada compared to the dollar. Look at the relative strength of USDMX compared to the dollar. So there are other currencies here that are acting better against the dollar, some other dollar pairs besides euro
Yeah,
and
and I
Cayman.
agree. I agree with you, Dale. There like you look at the Aussie dollar, it can't get out of its own way. The Kiwi can't either. I mean, this is really more of a euro move. But then you think about dollar diversification, if you will. It's like you're gonna get if diversification away from the dollar is still what is driving the market. You're not going to get traders saying, "Well, I'm going to ditch dollars to go buy, Canadian dollars." No, they just want they want the stability of the euro. Maybe misplaced. I know a lot of you, and even myself, I'd probably disagree. I don't know if that's the best place to be putting, money to work, but that's where they're finding, comfort. But I was looking at a chart like this, the U.S. dollar, South African rand. We are really on. I know it's, we're seeing dollar, forming a little bit of a, forming a little bit of a base, if you will. But you look at the dollar rand. This is a weekly chart. This looks dangerous. It looks like we could really, really drop further. And you probably say the same thing about the dollar max. I know, Dale, you were just mentioning
Yeah.
it. I mean, since Trump got elected, I'm like the dollar max is going to 18. I've even told my I even told my one of my closest friends, his mom and dad. I guide them because they have an olive business between the U.S. and Mexico, and they're always like, when should we be in pesos? And I'm talking their family business. And I'm like, you just keep riding out that Mexican peso till it gets to 18. This is since the end of last year. We're here now. I mean, we're at the levels where I'm not as sure anymore. And B, I still look at the price action here, and you look at the euro that could quite possibly see 120. Where does that put the dollar max? I mean, we could still theoretically see a little bit lower levels. But if we did, and Dale, this is to like points that you like to make. Let's say the dollar max makes a new low here. Relative strength is going to be very divergent.
Yeah.
And I think about that with the euro. If the euro breaks out and we break, this is, by the way, if you guys aren't in the Forex Analytics community, this is what we're looking at for a Gartley pattern. It's a perfect Gartley, actually. It would take us right to 120 and triangle resistance in the euro. But if we hit a new high on a in the euro, and the euro's like, let's say, I'm just going to use my imagination here. Let's say we break out to the upside and price breaks out to the upside, more than likely, without knowing right now, but more than likely, this relative strength is not going to topple those highs. So probably will be divergent as we reach for 120, which would be, in my opinion, the best place to be on the short side of the euro. I don't know if we're going to reach that far. We might only make it 117.50. I know a lot of guys in the Forex Analytics chat room are looking at 117.50, which, by the way, 117.50 to 117.80 is the 78% retracement of this entire move. So, that somewhere up there, I would argue, if we make it up there, it's going to be relative strength is going to be very divergent, which is, like I said, it's a big Gartley pattern for all intents and purposes. But it's going to be interesting. I think this month end, quarter end, uh, uh, half year end is really interesting. And you got stocks. I mean, the Nasdaq is at all time highs
Yeah.
this morning. I mean, we're there. I mean, you know, Dale, is the chase on now? Is this what we're dealing with? Like, I have to get in because I've missed the entire move. Is that what's on right now?
Yeah, probably, but I think there's a top once we take out that high of 61, what was it, 34, and maybe around 61.60, and then some Ellioticians will say that will complete wave one up of 5 for the melt up, and we could get a 2, right? So we could go to 61.60 or so, or at any time. Um, this is wave one, this whole thing, and we're about to complete it. So I,
So
I,
can I do a Jim Welsh count here?
yeah,
More
that's what he's, yeah, that's exactly what Jim is looking for. He said it last week, new highs, and then a short to complete
okay.
this. Yeah, but
Because what I would be thinking here is Wave one. Here's two. This is three. This is
That was
four.
4.
Five should be somewhere up here.
Yeah, some people are saying that, that's 5. And other people are saying that we're going to complete 1. Yeah, 1 of 5. So then you get 2 of 5, and then you go up there. So I'll pull back before we're at 6,500.
I don't know. I think that I believe more in this wave count. Just the only reason why I say that is 2022 was a significant low in the market. So that's why I think this is more likely. Regardless, if that is if we are going to have some sort of blow off top, I mean, maybe that's it. I don't know. It's gonna be interesting. Regardless, the market is squeezing, and there. I mean. I had said this a lot yesterday.
Look
I'm
at
like,
look at the Dow. Same
it,
thing. Look at a weekly
if the stock
or
market
daily.
can't sell off when we drop bombs on our probably most, the largest, nuclear capable enemy, one of the largest on the planet, we drop bombs on their soil, and the market couldn't even budge on the downside. I mean, that tells you pretty much everything you need to know about where the market's at. The market's still in chase mode. The market is, I missed the tariff or Liberation Day sell off. I didn't get a pullback, and now I'm chasing the market higher because the market's going higher, and look. We're going into half year end, and if I don't show that I'm got money put to work, I'm not keeping up with the indices and the indexes. If I'm not keeping up and I don't have any money to work, then I'm screwed. I'm going to get redemption. So I need to put money to work. As much as I don't believe stocks are going to go higher, if I'm a fund manager, you are forced to do it or you're out of a job. So that's, I think, the mode that the market's in right now. So that just my opinion. We have just a couple of minutes before you bring in Peter Bookvar, which is going to be a really really good interview today. Dale, how are you gonna tackle Peter today?
Oh, everything I do is spontaneous, so I don't know yet.
Oh, okay, all right. Well, fair enough.
I
All
I,
right.
I don't script anything. I just let the energy flow through me and wherever it goes. But I'll say something about Peter. You could ask him anything.
Oh yeah, yeah, I agree. I always love it. I love interviewing him, and I love having him here and listening to his interviews when he's on, when I can catch him, around the social media circles. Real
Yeah.
quick, Ryan, what are you up to today? What are you going to be trading? I'm looking for the euro to see if we can actually break the 116.50. That's on my radar today. What's on your radar today?
I'm seeing if dollar Swiss can get a bit of a pulse off this low down here, and
It's
maybe a
really
little
important.
yeah,
Do you
yeah,
think
yeah.
the Swiss National Bank is defending these levels? I mean, if you could look at the Euro Swiss, which I've got some longs on. You can see that we're obviously we got it's the levels 92.20, which is pretty far away. But the dollar Swiss has been pretty adamant about or holding above 80 cents. I mean, if you start trading below 80 cents, that's a pretty big psychological barrier, wouldn't you say?
Yeah, you can never rule them out that they might have a smoothing hand going in there, but they're not technical traders either, so
Whoa,
everyone will
smoothing
be looking
hand. I'm telling you,
smoothing
that
hand.
guy has the greatest expressions.
So,
Go ahead.
if everyone's looking at the same chart and thinking there's a level, the S&P are going to do it, then they'll be happy to let the level blow and then come in and pick up everyone's stops.
Yeah. All right. Well, dollar Swiss. Kman, what are your thoughts going in today? What are you going to focus on here? Do you think the dollar is going to actually break down, or are you just going to be
Um,
keeping your eye on the clock?
no, I don't. If nothing happens or all else equal, I don't think the dollar breaks down today. I think we have a consolidation period. We've had the war, we've had the reaction afterwards. Powell, I don't think he's going to say anything new at all. I think we're in consolidation mode. may even see the dollar slightly tick up. But I don't think we are going to see violent swings today, unless obviously we see those end of quarter, whatever half year flow starting to hit the market. But yeah, if I see a decent enough dip in yen crosses, I may pick up some, but I'm really not in a hurry today.
All right, very good. Hey guys, before I go, if you guys have not uh, gotten signed up for our newsletter to find out about trading analytics. We had a team meeting yesterday, just talking about everything that's coming with trading analytics in the coming months. Put in your name, email address. This way, you're in our newsletter. You can be the first ones to know. But more importantly, we're doing some sweepstakes for the next couple of months. Before the launch this month, and that means for the next few days. We're giving away a trader funding program assessment. So if you're already on the newsletter list, don't worry, you're in the sweepstakes. But you can put your name in again if you're like, I'm not sure. Well, make sure you put in your name, put in an email address, and I know people are going to put in multiple email addresses because they want to win. So, but make sure it's a valid email address so you can get to it. I'm not going to stop you for doing that. So, do that today. Make sure you're doing it because we're giving away something every single month for the next few months. So as we launch trading analytics, so you can get to that right from the Forex Analytics website, right in the middle. Dale, have a great interview. Ryan,
Yeah,
Kman, thank you guys so much, and I'll see you guys on the Morning Edge, which is our private show for Forex Analytics subscribers. I'll see you guys there in 45 minutes.
On that landing page for something new is coming.
Yes.
I'm really surprised that Steve let a planetary or a lunar eclipse be on that.
He
Steve,
didn't have any say. He didn't have
Steve,
any say.
I know how you feel about the planets. Did you fight it at all?
Steve?
He's not going to comment. Okay, Steve.
Why
Anyway,
why would I
Oh,
fight
no,
it?
here he is.
I know how
Yeah,
you
invoke
know,
the camera.
planets, and people that look at them and predict markets. That might give the wrong image that you're kind of an astro trader. So I just,
I
huh?
have nothing against planets.
Okay. All right, buddy. I know, I'm just giving you a hard time. Anyway,
I
I think
know.
that's a solar eclipse. Um,
It is.
anyway, yeah. So anyway, that just wanted to take your temperature and give you a hard time. So, thanks guys. Thanks team. Thanks Kay.
Cheers, Dale.
Ryan may have been some soft hands at the SMB. They must use some kind of moisturizer before
Yeah,
they intervene, right? And
cheese.
thanks, Blake.
Thanks,
Everyone,
thanks, Coach.
everyone have a good day. And it's my pleasure, and always look forward to talking to Peter. Peter, welcome back. How are you, buddy?
Good to speak to you, Dale. Thanks for having me on.
Yeah, so Blake was talking about how people, fund managers, feel the pressure to be in these markets, especially if they miss the April low. You don't feel that kind of pressure because you prepare your clients for a little different type of investing than people that just had measure themselves against the S&P. Or do you have that same pressure?
No, not at all. I mean, we're long the things we want to be long and avoid the things we don't want to be long. And I've been doing this long enough to know that FOMO is not a necessarily long-term path to success. Yeah,
Yeah.
maybe some people are, wanting to catch on to this rally, but um, yeah. If it
Yeah.
was October, November, I would believe that, but it's, we're only halfway done with the year. So while I understand people don't want to miss a rally, I don't know if it's the same sort of a pressure that we would see if it was the end of the year.
And how do you characterize this rally? I mean, it's one of the quickest recoveries I've seen in my career without any retracements, basically nothing.
I
And we're
mean,
not. Go ahead.
no, it's sort of, the sort of the mentality that always works is you buy every dip, and the market will never, not that it won't go down, but it'll never stay down. And, the
Yeah.
Fed's going to cut rates again and everything will be fine, and never mind on the tariffs, and everything is fine. The thing is, though, is you're back to 23 times earnings. The Mag 7 trade to me is over in terms of it trading as one group. It's completely splintered. There's
Yeah.
only really three stocks of leadership in that group: Microsoft, Nvidia, and Meta. Everything else has fallen off. So we're back to the highs, but
Yeah. Here,
without that mega
here,
cap leadership.
yeah, here's an example of what Peter's talking about. So look at Google. I mean, it looks like just a big bear flag rallied back maybe halfway, 61.8. And even the leadership, we're really not confirming, even though Netflix is at new highs, it's still diverging. Um, Meta, still not at new highs. Apple's been a dog, and Amazon doesn't look that great either. What I'd like to know is what do you think is going to drive the markets? We're almost through in June. And I know you had at first hopeful feelings about tariffs and how they could work if they were
No, I never did.
implement.
I was never a fan of tariffs.
Okay, well, you thought you could at least give it a chance last time I talked to you, how they could get there. Your disappointment came when they were extreme
No,
on liber.
I was never a fan of tariffs.
Okay,
All I was saying is if they're the least negative would be if they were very selective and targeted, not that it would be a positive. And what we saw was just,
okay,
a scattershot approach, and see what happens. And I a 50% tariff on imported steel, I don't know how there's going to be any construction to be had in the US with where steel prices could go. Uh, I think there's a level of nonchalance in the markets where, um, I said earlier, a never mind on the tariffs, but it's not really a never mind because what we are left with outside of the sector specific tariffs is still a 10% blanket tariff. And just to put numbers around that so people can understand and why I think this rally back to the highs from a fundamental standpoint is a bit too cute here. Uh, 10% tariffs on $3.3 trillion of imports is $330 billion. To put that into perspective, the CBO estimates that the US government is going to take in this year about 525 billion in corporate income taxes. Well, with 21% statutory rate, that implies back of the envelope non-scientific calculation that implies 2.5 trillion of pre-tax income times the 21% gets you to about 525. I'm obviously rounding here. So you add 330 to the 525, and you got about 850 billion of corporate taxes, and you divide that by 2.5 trillion, and all of a sudden you have an effective corporate tax rate of 34%. So Trump, by layering on a 10% blanket tariff, has basically taken away his entire 2017 corporate tax cut. Now, I
yeah,
promise you that most on Wall Street are not doing that math by ripping the markets right back to all-time highs. Uh, Now, as the year progresses and we see what earnings come in at, I think that will be sort of more exposed because yes, consumers will eat some of that, but corporate profit margins will also eat some of that as well, and maybe exporters to us will too. But that's what the corporate income tax also companies try to pass it on in other ways. So I just like I said, it's that buy the dip mentality. Everything's going to be fine, and but as I said, you have a higher tax regime. You're losing the market leadership, so you got to just find other things to buy. But you know what? The world has found other things to buy,
yeah.
and
The world,
international markets, and that's
yeah,
dollar
yeah,
assets, and
right.
that's to me the most noteworthy thing this year is the weakness in the dollar and the rally in non-dollar assets. I mean, great. The U.S. is back to the highs, but it's up, after a great couple of years, it's up 3.5%, while in dollar terms, the DAX is up 32%.
And if you take the dollar losses into account, we're not up at all. Dollar down 10% in the
Well, yeah,
last, what, 8 months?
if you're a European buyer
Yeah,
of the U.S. stock market, Yeah, it's been a much different year. You're down about 7.5%.
Okay. Where do you think yields are going? I know long term you're looking for higher yields. It's a generational shift that we saw in the bond market. It's not going to change. You have a view on the bonds, which have really been, it's almost like the market isn't there anymore, Peter. It's like I haven't seen bonds sideways for this long. You almost go back to 22. Um, and we didn't get anything during the risk off period. We didn't have much during the 12-day war. Uh, are we still destined for new lows here, or can stability reign in the
Yeah,
bond
we're
market?
definitely seeing stability. I mean, it's a bond bear market, and over the next decade, we're going to have much higher interest rates on the longer end. That's just how bond cycles have worked over the past 200 years. I'm not even going to say 100 years, 200 years. If you go back to, bond market history, these cycles run multiple decades. And obviously we're coming off a 40-year bond bull market. So to say that we're going to have a 10 to 20-year bond bear market is not crazy talk. It's what
Yeah.
historical trends have shown us. But, in between that, you're going to get nice rallies and you'll get periods of stability, and you'll get people that will say, like, you gotta buy duration, you gotta buy the long end because growth is slowing and inflation is moderating. But I think over time, the trend is up when it comes to interest rates, and if the dollar keeps weakening, then that's going to reinforce that. If U.S. debts and deficits continue to uh, go through the roof, that will eventually reinforce itself in longer, higher yields. If JGB yields, gilt yields, even German bund yields is a much must watch right now. German bonds have been the new global safe haven, but now with the
Okay.
Germans spending more money on defense and infrastructure,
Right.
the 30-year bund yield yesterday was 9 basis points. It was one of the bigger one-day moves we've seen in a while, as they said that they're going to be issuing more bunds in the third quarter to finance the things they want to spend money on. So to me,
Military.
military and
Yeah.
domestic infrastructure. So the bond bear market's still here, but yeah, we're going to get periods of stability and rallies. But I think the trending yields is still up on the longer end.
Okay. Any comment on the U.S. airstrike on Iran and the market's reaction, the market's believing it was a 12-day war? Do you believe it was?
Um, I don't know, but Dale, we've been doing this long enough to know that geopolitics have usually a very fleeting and short-term impact on markets and the economy unless there's an actual disruption to the supply of goods and commodities.
So
Um,
let's
so
talk about this.
there
Basically,
hasn't been, and that's
yeah.
why you've had the fallback in crude. Not one barrel of oil, the delivery of has been disrupted, suspended, diverted. So there were a couple of ships that did some U-turns in the strait, but predominantly, nothing has been changed. And until then, geopolitics will sort of be isolated to those specific countries and events. Do I think the world is a safer place? Yeah, I hope so. That we've eliminated or pushed off the ability of Iran to get a nuclear weapon. But again, geopolitics, I mean, outside of world wars, uh, it doesn't matter for more than a couple of days or a couple of weeks.
Okay. All right. I've seen it last longer, but usually it's the run up to hostilities is where the big moves happen, and here's that unwind. They
I
I've
mean,
seen go ahead.
no, go ahead, finish, Dale.
I'm just saying that I was looking for this, and we actually did fail at this trend line with divergence, but you know, uh, if there wasn't so much volatility, and this might be a great break to buy in crude. I know a lot of people are talking 40 because of economic weakness, but just because there's no interruption of oil now doesn't mean that there won't be an interruption of the oil flow later.
I'm very bullish on oil just from a natural supply demand adjustment around in the $60 level. I mean, uh,
Okay.
just
So
just
this
look at.
this created a great opportunity for you.
Well, yeah, I mean, I've been long. I was long before this move, and was on CNBC when it was at $61,
Yeah,
bullish on it. I mean, we're seeing just your classic low prices are about to cure low prices. Well, first of all,
right.
when OPEC announced the third quota increase, you really didn't see much of an actual barrel per supply add from OPEC, particularly Saudi Arabia. So, telling me that maybe the quota move was just more in line with current production. Uh, the U.S. oil rig count, I think, is down 7 weeks in a row at the lowest level since 2021.
Yeah,
So, U.S. shale has immediately adjusted to low prices. There was a Dallas oil and gas survey that they released back in March that asked shale drillers and some non-shale drillers at what price is your break even on new wells, not drilling existing ones, but on new ones. And they all said mid to low to mid 60s. So there's
okay,
going to be no new drilling down here. And
right.
so I think we're setting ourselves up for a low in oil prices. And a real inflation adjusted basis, oil is dirt cheap
Yeah,
around these levels.
yeah. And until Israel attacked, a lot of bears, the market set up, COT set up, with everyone being bearish because they're looking for weaker economies. So probably unwound a lot of those shorts on that spike. Uh, do you have any names you could give that you like in the oil, or are they international oils that you're buying?
Yeah, we're long more the international just because they're cheaper, Shell and BP, and we're also long Canadian natural resources
Okay,
north of the border, but also own Noble in the U.S. As
okay,
an offshore driller, because I think if the shale basins in the U.S., which seemingly have topped out, even close to maybe in the Permian even, then there's going to be more offshore drilling, and we're long Noble, even though they do business around the world, and then long EQT on the natural gas side.
okay. Here it is. That looks great. In fact, I think natural gas almost looks better than crude, um, from a chart perspective. I was just going to mention, I pulled up the DAX, and I think this is the first time that we'd be on the verge of making new highs, and this might be, DAX might be in a corrective pattern here. It's not leading, at least not this week. It would be one of the first times. Um, Maybe that trade, people have been talking about it for months. Maybe that has to correct a little bit.
Yeah, I mean, you don't want it to go up in a straight line. It's due for a rest. Uh, it's put in a multi-year performance in 6 months.
Okay. Uh, what do you think about? I know you're dollar bear. You have a view on the yen. I know you follow it fairly closely. And anything that we should be paying attention to, regarding Japan having to raise rates, which I think they avoided since crude came off. But
Well,
go ahead.
yeah, well, I mean, we can say generally, the dollar cannot get out of its own way. The dollar couldn't get out of its own way in a supposed flight to safety
Yeah,
on the bombings. It rallied for one day and immediately gave it back yesterday.
yeah.
Um, the dollar can't ra didn't rally when yields in the U.S. rose, and so the dollar is can't get out of its own way. So I
Do you,
think
does the
a
positioning bother you? I mean, we have record dollar bears
yeah, I
on
mean, maybe
COT.
we'll get a dollar bounce. I mean,
That's what
I
I think.
that could be just a
Back to
trading
here,
thing.
maybe.
Yeah. So okay, you get
Yeah,
back to 100, you go from
yeah,
98 to 100. Big F, no, big
yeah.
deal.
Hey,
There's
hey, Mr. President, kids
yeah,
are watching.
right. I mean,
All right.
there's a major rethink, uh, global rethink of the extent to which foreigners want to own U.S. assets because they got way over their skis over the last bunch of years. And
Yeah,
so while it's not a bear call in the U.S., It's just saying the foreigners uh, feel slighted by this tariff war, and it woke them up to the fact that they own way too much NVIDIA, they own way too much Microsoft, they own way too much still U.S. Treasuries, and it's time to own other things at home. So maybe,
Yeah.
whether they're selling or not, I don't know, but they're not buying incrementally to the same extent that they once were. And price is set on the margin. So if there's less flows into the U.S., then that has an impact on the value of the dollar and other assets.
I want to tip my hat to you, Peter, because you took a lot of heat for many months, maybe even a year or so, being bullish at precious metals when, gold was 1800 or 2000 and silver was in the 20s. Congratulations on a real big call that finally came home for you and having the patience and the perseverance to stay with them and be rewarded.
Thank you. And finally, silver's playing some catch up.
Yeah.
Platinum, which we're long, is
Yeah.
playing some catch up,
Yeah.
which tells me that with both still well below their highs, that there's still room and still for money to be made in the space. I think commodities generally,
Yeah.
we're becoming more bullish on. I mean, you take Europe, which where even NATO just announced that they're committed to raising defense spending, obviously something they've talked about for a while now, particularly this year with Trump winning and Germany in particular. But, just imagine how much copper and steel and aluminum and stuff you need
Yeah.
if you're going to expand your spending on defense.
Yeah. So yeah, commodities and so we could have commodity inflation with tariffs loaded on top of them. How does that
Correct.
work out? How
Yeah.
does that work out?
Well, that's a challenge. It's just raising the cost of doing business.
Yeah.
Tariffs, obviously there's a big debate on is it a one-time price adjustment? Is there something longer lasting? Theoretically, yeah, there's a one-time price adjustment, and if the price is too high, it's going to hurt demand and prices will fall back down again. But when you disrupt global supply chains, we learned after COVID that could be inflationary as you just raise the cost of doing business. That can have more than just a 1 year impact. I mentioned earlier, the cost of construction right now. Well, rents we know are the biggest component to CPI. Well,
Yeah.
if the cost of capital is higher, if the cost of construction, whether it's higher lumber, higher steel, higher copper, or higher other things, dissuade me from building that apartment building because of tariffs, among other things. And we all of a sudden have less supply of multifamily after the flood of supply that's coming online this year, then the deceleration in rents this year and probably into the first half of next year is going to reverse itself in the latter part of next year. So is tariffs longer term inflationary or one time? Well, like I said, if it's going to inhibit the construction of multifamily, it's going to have a multi-year impact on inflation. So the inflation debate with tariffs is much more nuanced than people are giving it credit for.
Okay, then let's talk about the consumer. And a lot of people don't think student loan repayment and delinquency and charge-offs are a big deal, but these people are higher earners. And if they're having a problem paying off their student loan debt, they have other debt. They have mortgage debt, they have credit card debt, they have auto loan debt. Is this more of a big deal than the market is really giving um, credit to? That this could be weaken our consumer base, retail, everything even more?
Well, the backdrop going into that is over the past year, and I mean at least a year, there's been this major divergence in terms of income cohorts of on consumer spending. We know the upper income spenders has basically carried the economy, while
Right.
lower to middle income consumer have just been much more financially challenged and much more circumspect with how they spend their money. So now, yeah, you throw in student loan payments, and that's going to have an impact. And I go through probably 150 quarterly conference calls, in businesses in all different industries, particularly anything consumer touching. And, some areas are doing fine. Carnival said the consumer is doing great. But then on the other hand, you have Dollar General telling us that more people making 100 grand are coming into their stores. Well, you're doing that for a reason, not because they have this great, incredible selection, but you're probably trying to save a bit of money. So I think that the consumer is still very challenged. Again, pockets of strength, but also areas of weakness and a value-seeking customer. One thing I want to tie this into and something I wrote about today with the Fed. People think very simplistically that rate cuts good, rate hikes bad, and
Yeah.
buy everything when the Fed's cutting and be afraid when the Fed's hiking. But we have $7 trillion of cash in money markets, and I'm sure a few trillion dollars in CDs. If all of a sudden that saver, that interest income earner, is going to earn less money because the Fed is cutting interest rates, well, that's less money in saver pockets. So take that cruiser, that boomer who just went on that cruise to the Caribbean, who a year ago was making 50 grand on their million of savings, and then after 100 basis points is now making 40 grand on that million of savings, and now after maybe 2 to 3 rate cuts this year, may only be making 35 grand on that million of income. Well, they're still getting some income, but that loss of 10 to 15 grand of interest income could be a cruise.
Yes.
My friend Danielle DiMartino Booth had a great stat last week that consumers spend 70 cents of every dollar of interest income versus 2 cents of every dollar in terms of the wealth effect of one's stock portfolio. So rate cuts can actually hurt consumer spending. And if long end rates don't accommodate the cut in short rates, like
Yeah.
it didn't in
Right.
this fall, then you're
Right.
not going to get any help on the housing side. So, people think very simplistically about things only until the economic results are reflected in the data. And, getting to what we talked about earlier, the stock market back to the highs, pretending like, it's January 2025 again and nothing has happened. Well, the world has changed. Flows are changing. The dollar is much weaker. The Mag 7 trade's done. Again, in terms of one big group, tariffs are much higher than where we came into the year. So I just think that people just need to think about these different things. Now, uh, this is not a bear call. I just think that people need to just understand the investing landscape and environment that they're living in, and that today on June 25th, it's different than what it was on January 25th, even though the stock market's essentially at the same levels.
Okay. So do you think the days of just buying a spider and golfing for 3 years is over?
Well, not necessarily that it's over, it's just going to need new leadership.
Okay.
Now, can it find it? Yeah. But, are banks going to drive the next bull market? Is Caterpillar going to drive the next bull market? Maybe. But it's not the Mag 7 anymore.
Okay. All right. Because a lot of people are still arguing the point that we're going back to the same old game with the Mag 7 leading.
Well,
So
it's only three of the seven.
that's right. I even showed Google.
So
So
that's my
it's
point is that
Mag
it's
3.
splintering. The group is splintering up. And
That's a good point.
so and that's a third of the S&P.
And we've gone back to the highs in the financials. You have a view on the financials with what you think about bonds and some of the duration risks that they still have on the books, like B of A is the
I mean,
poster child for that.
the trade's easily explainable by just, the yield curve steepening again. Um, I still think there's a credit cycle ahead if the economy gets negatively impacted by tariffs on top
Yeah.
of what was already, sort of a mixed economy anyway. And if in this budget bill, government spending does slow, even if it slows just a little bit, that incremental government spending impetus, which was a major driver of economic growth over the last couple of years, if that slows, then you're going to lose that. And AI tech spend is still very strong, but if there's any blinking on AI tech spend, that's been a major driver of growth too. So the economy overall is pretty mixed. And
Would you short Nvidia?
no, I'm not shorting anything in this market, but
Okay.
here's another interesting stat for those that are Jim Grant is a friend of mine, and I subscribe
Yeah.
to um, his newsletter. I actually
Newsletter,
had dinner
yeah.
with him last night, and one of the great stats in his most recent um, newsletter, well, Grant's Interest Rate Observer,
Right.
is
Yeah.
last year you were able to rent data center space of NVIDIA GPUs, and it would cost you about, I think it was like $5 per GPU. Now the price is 50 cents. So you had
Wow.
all this data center build out,
Yeah.
believing that the economics of $5 was going
Yeah.
to last a couple of years, and now it's disappeared within a couple of months. And
That's a shock.
the level of potential data center spend obsolescence when all the money is piling into data center buildouts. Um, that was a striking stat. Now, when this will matter for the stocks, or we'll have to see. But don't own these things blindly.
That's a boogeyman out there, Peter. You know, it's like a currency devaluation.
Well, it's technology. Technology things
Yeah.
always get cheaper.
Yeah.
The problem is that a lot of these real estate people getting into data centers, they're used to investing in a shopping center or multifamily that has a long life to it.
Right.
I don't know what the life is of a data center.
Right. Data was on the new Star Trek. I don't know how, what age he lived to, but I know that a lot of things that you say, Peter, age very well. And I encourage people. I received this from Peter, and his free stuff is great. So, he does a couple reports a day and gives you the highlights of what he feels is important to him. You can follow Peter on X at pbookvar, and I always read Peter's stuff because he points my eye towards things I was not paying attention to, part of my intelligence gathering, and I think you'll be happy if it's part of yours. And Peter, want to thank you very much. I hope you have a great summer.
Thank you, Dale.
And
You as well.
yeah, and that peace is breaking out all over the world by the time we're talking next, although I doubt it, in September.
Sounds good. Thank
All
you.
right, Peter Bookvar, everybody, follow him. Elite work, one of the better thinkers in the financial sphere. And that's going to be a wrap for me and everyone. I hope you have a good trading day. You could join the team in about 13 minutes on the morning edge. And don't just count your pips, count your blessings. You're very welcome, everyone. Saloom, and I see a new name here. Two, yeah, same to you too, and Rick, Mandy, Frederick, all you guys. Good hunting today. And don't forget stops, and not right at the turn, not right at the, uh, you know, above a swing high, swing low. Give it breathing room above it. It'll keep you from being right the market, wrong the trade. More often, anyway. All right, that's a wrap, everyone.